when my daughter had graduated college, we sat her down and we started talking about infinite banking and wanted to open up her eyes to investing. And part of doing that, I felt it was prudent to start managing her credit score to make sure that we're taking good care of it. And when we went and looked at her credit score, it was higher than mine. In today's podcast, we're going to cover how that happened and how you could do the same for your kids to increase their credit score. Enjoy the episode.
Welcome to the Infinite Wealth Podcast, where we teach clients how to build wealth and create passive income without the risk of Wall Street.
Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen, along with our co-host Anthony Faso. And like Anthony said in our pre-introduction, is today we're going to be talking to you guys about why it is important to start managing your kids' credit scores and what you can do about it. Anthony, I know you're excited about this show. Mm-hmm. You're the one that brought this topic. Mm-hmm. Share with our listeners a little bit about the background of this topic.
Well, it's kind of like I mentioned earlier, is that when I sat my daughter down and we were looking at getting some rental properties, like, you know what, we need to make sure that we have a good credit score and that you can maintain it. The first thing we did is we had to see what the score was. And there's a lot of ways to do that. One avenue that we've used is a website called Credit Karma, which is owned by Intuit. Intuit does QuickBooks and TurboTax, so they are a trusted company. But so we had signed up for the free account, and it gave her a credit history, and it gave her credit score. And when I looked at it, I'm like, your score is higher than mine.
Interesting.
Which another interesting thing, my wife's is higher. My wife's. I wasn't plural.
Wow.
I mean, it was possessive. Yeah. My wife's score is higher than mine as well.
Okay.
Which, to me, I think that's an example of how inaccurate these scores are. I mean, neither one of them make much money, but they do have a good credit score. And I was curious why her credit score was so high. I figured it'd be pretty low because she didn't have much experience, but I was incorrect. What we did is we looked at on what made up her credit score, and the first thing I saw was that she had student loans. And maybe we talk a little bit more, but I just mentioned, I know I have policies for my kids. We still got student loans, and for a couple of reasons. For one, I wanted them to be on the hook, that if they didn't complete the school, we weren't going to use a policy loan. So I wanted them to have some skin in the game, but also access to capital is never bad. But I didn't even think that the benefit it would have on her credit score. But what made the biggest impact is that we looked at her credit history, and it said in there that she had credit history from a credit card going back 13 years. Okay, she was 21, 22 at the time, right? So what this means is she had established credit when she was 8 years old. Now, she's a high achiever and a go-getter, but at 8 years old,
she's a forward thinker.
It was more maybe American Doll girls, or I don't know, maybe she was past that at that point. But what we had done unbeknownstly is when we added her as an authorized user on one of our credit cards, we did it so she would have the card. If emergencies came up or something happened, she would be able to pay for it. We didn't take into account that would affect her credit. So that's when I bet there's a lot of, I quickly learned a lot of information about her credit score. So we thought we would compile that and a couple of other attributes to kind of help you be able to make sure that your kids' credit scores are going to be high and well maintained. But really, the important thing is, Cameron, why do you think having a good credit score is important?
Great question, Anthony. It's very important, right? I think that in this day and age, it's really difficult to go out there and not be playing the game that they are trying to have you play by establishing credit and then being the potential for borrowing money. I am going to bring up kind of the infinite banking point of view, maybe at the end of this. So if you guys are out there and you're listening to this, we are going to view this from an infinite banking practitioner's point of view, or Nelson's point of view at the end. So listen to us. We'd love to get some feedback from you guys along the way. So as you're listening to today, take some notes, write some stuff down, throw it in the comments, and then look forward to hearing from you guys. But in today's day and age, the things that make this important, number one, is there's a lot of common things that an individual needs to do in their life, such as rent an apartment. You buy a home, you got to buy a car, and those are some of the essentials that happen over someone's life early on, late teenage, early 20s. The second reason that it's important is because employers are increasingly looking at someone's credit score when they're hiring them, right? That's a big piece that can reveal some character traits. And so employers have been starting to look at those as common. And then third, you kind of mentioned the other one, Anthony, is buying rental properties. Right? As you're going out there and you're trying to acquire and buy assets, those lenders are going to look at your credit score to see if you are credit worthy, see if they can lend you some money. And then fourthly is if you're out there looking to start a business, there are lots of lines of credit that are available to you as a business owner if you've been paying your bills and on time. And so as a business owner, Anthony, I think you mentioned this earlier, is a prudent measure is for all business owners to have some sort of line of credit that is available to them at any time, because you business owners know that the ebbs and flow of business can put a damper on cash flow at times. So always want to have access to money. And now I'm going to throw it back to you, Anthony, is you've had some experience with this, right? And so a lot of these are going to be piggybacking off of some of the stories that you've shared. But Anthony, share with our listeners some of the ways that they can actually go about doing this.
Now, one, like I'd mentioned earlier, is adding them as an authorized user. Now, that doesn't equate to every credit card, right? And what I found is if there's a separate credit card number, then that will typically add on to their credit score. But what you'd have to do is contact your credit card, the bank that issuing your credit card, and ask them if they will be reporting to the credit on authorized users. What is interesting is some of them a lot of the banks have limits. Like Bank of America, for example, you can only put an authorized user once they're 18 years or older. However, American Express and Discover, that age is 13. But there is no age limit for Capital One, Citibank, Wells Fargo, and Chase. But if we are doing this, you have to keep in mind the activity on your credit is going to affect your child's good or bad. So you need to make sure that make sure that you are making your payments.
Great point, right? Is you certainly don't want to be dragging them down. Well done.
Now, this second one is what I thought was very interesting, is that you can open up an account, whether it's a cell phone, a utility, or maybe the internet, in your child's name. Also, that also goes to, you can report if they are renting an apartment. Those typically, all those activities I mentioned, typically activity is not reported to the credit agency unless there is a delinquency. However, you can contact the credit bureau, and they will allow that to be reported. Now, Experian, for example, they call it Experian Boost, and we're going to put a link in the show notes. But you can click on there, and that'll give you more information on how you can have these some of these utilities and rent payments reported on your credit card. And when your child if they do go to college, one of the things you're going to see at orientation, you're going to see these booths of credit card companies, right? Willing and able to issue your child credit. And so it's not emphasized so much on your credit history or your income. Is, hey, you're a college student. We want to get you in the game and get you part. It's almost like a drug dealer. right? Where they're giving you a little taste at the beginning. Now, again, you have to be very careful. I would say when I I got a credit card when I was in college, and there was a little bit of abuse on there, and so um, we got to make sure that if they are going to get that card, that they are going to be a proper student or a good steward. Because if they miss some payments or mess something up early on, it's going to impact them for a long period of time. Now, another thing you can do is accept the student loans. Now, a lot of people, particularly our clients, are under the misconception that they're not going to qualify for financial aid. Now, they may not qualify what I would say a need-based or a financial need-based or free money. Okay. However, every college student is eligible for a Stafford loan. And I think that first year it's about 5,400. And then each year it gets a little bit higher. So again, I had my kids take that out because I wanted them to have skin in the game. But maybe you want that or not, but there could be some advantages of taking out that student loan so they can establish credit. Now, again, if you're doing IBC, let's say you get that loan for $5,000, maybe you don't need it. But I wonder if there's a place you could put it that could be liquid and maybe you can save interest. So what you could do is maybe you take that loan of $5,000, you got to put it somewhere. Why don't you store it in one of your policies? Thus, stop accruing interest. And then when they graduate, or as long as you want to take, we could slowly move that money out and repay the loan. Now, we are paying some interest here. So if that's something that is a concern of you, I totally get it. But you have to be the one to determine if that interest is worth the advantage of having the credit score. Another interesting thing that you can do is you can have them co-sign, or you co-sign on either a loan they have, or, which I think would be even better, is have them co-sign if you're getting a car loan. They're not going to qualify from themselves, but if we can get them on the note, they're going to start building credit history. Because ideally, when we're looking at your credit history, we ideally want like a mixture of credit. So we can have some student loans, we can have some credit card, and an auto loan would create a good mixture.
Nice. Good suggestions, Faso. We're going to touch on some of those options here in a second, but once they establish kind of how to do that, is there some sort of monitoring that they should be doing?
Great question. There's a lot of monitoring services. A lot of them come free with your credit cards and so forth. But again, I'm using Credit Karma. It is free. I know there's some others out there, but you need something where you can manage it. And one thing I think everyone should do, and that everyone should do for their kids, even if they're minors, and that is create an online account at the credit bureaus for many reasons. For one, it's kind of whoever does it first gets it. Because what we found this out the hard way is somebody had stolen my wife's identity. So then we got some lines of credit and did some loans. So we went into each credit bureau. We hadn't done this before, so we had to initiate to create an online account, which allowed us to put the credit freeze, and we could also properly manage it. But we couldn't do it on one of the credit agencies because whoever stole it beat us to the punch. Mm-hmm. So in order for us to take control of that account, we had to file a police report, and then we had to submit the police report to the credit agency, and then they would unlock it and give it to us. Well, as I was preparing for this podcast, I didn't even think about the point where people are stealing minors' identities and starting to create identity fraud. The problem is they don't know because they're not trying to get credit somewhere else. So I think it would be very important to lock that in, not only so you can monitor your credit, but more importantly, you can block other people from doing the same.
Nice. Well done, Anthony. I appreciate you kind of sharing that with our listeners, right? You shared kind of why it's important, then also some practical steps that they can take to establish credit and monitor credit. But I will share with you guys that Anthony and I did have kind of a back and forth or exchange on whether this is something we wanted to share with you or kind of how this topic would fit in from the lens of infinite banking. And so I thought that was interesting enough to be able to share it with you guys. And so we are looking for some feedback, right? Is one of the sentiments that I share is that when I look at infinite banking, I usually put everybody on a spectrum, right? There's some purists. There's, Nelson Nash is on one end of the spectrum. I don't think I'm as far on that spectrum as Nelson Nash is, but I know that we do have some listeners that would be purists. And so they would hear us talking about establishing credit. And I think that might surprise them. Would you agree with that?
Yeah.
So, Anthony, what might be your take on maybe how someone would approach this or view this from a purist, IBC purist point of view?
I mean, if we're going to be an IBC purist, one of Nelson's rules is don't do business with banks.
Yeah.
I mean, the problem is, as we were discussing, we have to do business with banks. I mean, even if you want to pay your premium, you have to have a bank account to do it. So really the question is, at what level of activity are we involving the banking system? And it's my belief that what Nelson is trying to avoid is ideally to get rid of the Federal Reserve. And I would concur. I would love for that to happen. And part of the IBC movement is if many people started incorporating infinite banking, we could end the Fed. My personal opinion, I think that as though I would love for us to end the Fed, I think that'd be very difficult and highly unlikely.
Mm-hmm.
But in my point of view, what the biggest reason of doing business with banks or not to do business with banks is that fractional reserve banking.
Yeah.
Meaning you make a deposit $1, they can turn around and loan out $9. So I interpret not doing business with banks is minimizing how much we're depositing into banks so they can't multiply it. Now, using banks for loans, I don't think increases the inflationary risk that Nelson's worried about. So I don't have an issue with it. And we also follow Robert Kiyosaki as well, and he's all about using other people's money. Personally, I try to have a balance between the two. And I think debt can be a tool or it can be a weapon.
Yeah.
And how your knowledge and your discipline will determine how you use it. So to me, I'm open to use banks for debt. I deposit very little inside banks.
Yeah.
What's your take, Cam?
Similar. I think the sentiment that I would share would be that debt is absolutely a double-edged sword, and more oftentimes than not, a lack of a conversation around a topic leads to ignorance. And so that would be my concern of not addressing this, is that especially when we're talking and framing this in regards to your kids, right, is we have a lot of clients that approach us. They're adults, right? They're in the system. It's really difficult to get out of that or to kind of get to a no credit score at that point in someone's life if you're an adult. But if you do look at it from someone that's starting over, right, and you have a parent that is a purist, I think there's absolutely an avenue there where somebody could go down this road and go throughout life and really have no credit score or not play that game to that extent, right, if we are practicing some of the principles with Nelson. But I think that if you were to look at our audience, I think that that's a pretty small number, right? Yeah. Most of the people that I'm talking to, that we're talking to, are coming to it and they're looking for an advantage, right, in themselves and not looking to totally remove themselves from a system. So that would be my sentiment. I'm happy to bring this up and share it because, again, I think that having a conversation around this, there's some things that you can do to put your kids in a better situation, not only with access to money, but also on the education side to it. The more they know, the better off that they're going to be.
Well said, Cam. Whether you do business with banks or not, your credit score is going to impact yours and your children's life. Just as we'd mentioned, employers are looking at it. Even some insurance companies or auto insurance are giving discounts for people that have lower credit scores. So we need to make sure that we have a good credit score. So maybe if you're a purist, you don't need to input or execute all of these strategies, but there's quite a few that you don't need to use other banks.
We did an interview with Brandon Elliott earlier this year, and to be honest, I got some emails on that one.
That was the most controversial one we had.
Yeah, I had clients send emails and be like, "What the heck are you talking about?" Right? Everything you guys preach is does not align with that. But again, I think there's some elements, there's some nuggets there that we can take, and one of them was this: is one of the things that I wrote down was to be aware of kind of how a credit score is made up. And so I wanted to share that with you guys because I do think it's relevant, right? Along the lines of education. One thing that you want to know is the debt history, right, makes up 35% of someone's credit score. Your current debt level makes up 30%. How long you've been in debt makes up 15%. Any new debt that you've taken out in the last 12 to 18 months is going to make up 10%. And then the type of debt that you have, whether it's student loans, consumer debt, makes up 10%. And so I think just knowing kind of what your levels are and how they're going to score you is absolutely relevant to this conversation.
You know, on that note, as I was preparing for this, I went and looked at my credit score and it went down 60 points in the last 3 months.
Did you, what happened? Is it,
you come up with the zinger? Come on.
No, I imagine, I was going to guess it's probably from buying rental properties and using credit.
I think part of it was I bought a new rental property, so there was new debt and there was a hard a check on there. But also, I'm playing the rewards credit card game, and one credit card we use is Southwest, and the reason being is you can get the companion pass, meaning you can have one companion and they can fly wherever you go. All you have to do is pay the taxes. And so our goal is to achieve that. So, and we're also doing a house remodel. So we're spending a lot of money, but we're not paying the credit card, because for me to get credit in the points, it's when I pay the bill. So I'm not going to pay the bill till January 1st. So I can start working on the companion pass for 2024, but I didn't even realize the impact that had on my score, because my debt, credit card level is pretty small. Then all of a sudden that it shot up. So I'm glad you shared this piece, because it's important to know if we're going to be needing our credit course soon, whether it's to get debt or maybe to apply for a job, we want to make sure that we look into it first and make sure we're not doing something that's going to hinder that score.
While you were looking up your credit score in preparation for this podcast,
you were doing your hair. And
no,
it looks good.
I was thinking back. I was like, man, when's the first time that I remember credit being important for me? And it was when Jessica and I moved here to Las Vegas. Straight out of college, and we were actually looking for an apartment. And I remember, credit and everything else. And to be honest, that was the first time that it kind of became important in my life. And so I started kind of researching and looking around, and I was wondering if you could get an apartment without having a credit score. So I actually called a couple places. So, well, it was interesting. I told them that do I have to have a credit score? And they said, no, you don't. You don't have to have a credit score. And I said, okay, well, how would I go about that, or what would be the consequence? And I asked them if it would be exclusionary, and they said, no, not at all. as long as you're employed, right, and you don't have any criminal history, they would more than likely approve you with just a larger down payment.
So you were 0 for 2?
No. So anyways, I thought that was interesting, right? Is because as you're entering kind of adulthood, you're getting out there and you're looking at some of the opportunities. That's one of the things that I was not aware of, but I thought it was interesting just knowing that you don't need a credit score, right? They might just charge you a little bit more. So again, that avenue of not carrying a credit score or going after it is open and available to you.
Great info, Cam.
Yeah. Happy to share. You're welcome. But,
my pleasure.
All right. Great. We hope you guys enjoyed this podcast. Again, today we were addressing how you guys can help your kids establish credit and some practical ways that you can implement that. So hope you guys enjoyed this episode.
Go make it a fantastic day.
Take care.
If you like this video, I know you're like this one. And if you want to learn how investors use infinite banking to increase their returns and lower their taxes, check this out. And if you have some questions and want to see if infinite banking is for you, hop on a discovery call with us. Link for that will be in the description.